Welcome back to Explain the Charts. Today is March 11th, 2025. We're looking at SPY, the S&P 500, and analyzing the news and charts. Recent headlines paint a concerning picture. The market's been pummeled, with the Nasdaq experiencing its worst day since 2022. The Dow also sank significantly, fueled by fears of a recession triggered by Trump's economic policies, including tariffs. Forbes reported that the S&P 500 sank to a 6-month low as Trump himself told people to not watch the stock market. The market erased its comeback, with the S&P experiencing its worst week since September. Let's dive into the charts and see how this translates to price action. Here's the daily chart for SPY, showing us the last few months. We can see a significant dip happening recently. It went from a high of around 610 to a recent low of around 560. That is about a 9% drop in a short amount of time. This corresponds to the news of sinking stocks, early recession fears, and President Trump's tariff policies rattling confidence. A positive note is that future markets are up slightly, giving us a possible sign of retracement and a possible buy opportunity. If we zoom in on the daily chart, we see the decline was rather drastic over these past few days. This indicates strong selling pressure, likely driven by the news and investor anxiety. The most recent candle shows some slight upwards movement, but we'll need more confirmation to call that a solid reversal. Now, let's switch to the 1-hour chart to get a closer look at recent price action. Here we can better see the intraday volatility. You can see many small pumps and dumps over the past few days. The last few candles on the hourly chart show the index struggling to break above the 575 level, so it seems to be a point of resistance right now. If recession fears continue to grow, we might see this level hold or even move lower. Now let's turn our attention to the 15-minute chart for a scalper's perspective. We can see that after yesterday's big drop to 555, there was retracement back to 577 today, but then stocks took a nosedive, back down to near the 560 level, and then a steady but slow climb, with resistance around 575. If we narrow down and focus solely on today's trading patterns in 15-minute increments, we can see a very jagged line. This shows a very unstable day of trading, with lots of very small and varying retracements. It's a dangerous day to be trading SPY. In summary, given the news, the daily, hourly, and 15-minute chart data, I'd give these events these probabilities. A rally back to the high of 610 within 3 months is unlikely, maybe 20% probability. Sideways movement within the 550 to 580 range over the next month seems more likely, perhaps 50%. And a further drop down to the 500 level within the next 6 months is definitely possible, with a 30% probability. If we continue to see negative economic news and Trump's policies continue to spook the market, then the likelihood of a drop to 500 will increase. Important support to watch is around 550 and resistance around 575. Keep an eye out for any changes in economic data, Fed announcements, or any major news events that could shift the market sentiment. Thanks for watching Explain the Charts.